Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is our good friend Larry MacDonald. He is the founder of Bear Traps Report, and he also has a new book out called When Markets Speak. Welcome back, Larry. How are you?
Thanks, Ivan. Yeah, it's been in the five or 10 on Amazon for much of the last couple of months, and thanks very
Wow.
much.
Yeah, congratulations on that. It's always a pleasure having you come down to Wall Street Silver. I wanted to get you to get you on to talk about everything that's happening in the markets, gold, silver, but we'll start off with gold. I read an article this morning that there's a gold buying frenzy gripping Vietnam and Thailand right now. There's basically it showed pictures of just lines and lines of people waiting outside to snap up gold, outside of banks and outside of gold shops in Southeast Asia. So what is going on there? Why are banks, central banks, and people snapping up gold really quick right now?
Well, one of the major points of our book is that when you have inflation at the same time, you have central banks and governments around the world, especially the United States, that are aggressive with sanctions. Um, People lose confidence in financial assets. And so financial assets are bonds, like so just think of like treasury bonds globally, but in all the different countries. Look at what's happening in Japan with inflation and with their currency. There's just more and more people that normally would be putting money into treasuries or into government bonds globally that
Right.
want to own something else. They want to own gold, Bitcoin, or hard assets.
So what do you see happening now with the Federal Reserve? A lot of people online have been talking about like what the next move is for the Fed. Are they going to hold rates? Are they going to lower rates? That's the big question on the table now. Do you think they will end up lowering rates, holding rates, raising rates, or will they wait after the elections? What do you think, Larry?
Well, that again, one of the core parts of our book, When Markets Speak, comes down to this point. In Powell today, what they're doing is they're playing with a serpent. They have to move toward financial repression. And
Right.
all that means is they want to keep interest rates below the rate of inflation. That's how you get rid of a multi-trillion dollar debt hole, 34, $35 trillion debt hole. There's only two ways out: default or financial repression, inflate your way out.
Right.
But they can't admit because they're dealing with a serpent, they're dealing with a beast. If they're too obvious, then they will scare the long end. We're starting to see this a little bit, what we call term premium. So we're going into what's called a bear steepener. All that means is when the long bonds, the 10, 20, and 30 years, they're up the last like 3 weeks especially since the debate, they're up like 30 basis points over the last like 3 weeks, whereas the 2 year is relatively unchanged, up a little bit. That's what's called a bear steepener. That is really good for hard assets because that means that the term premium, the trust, the global trust that people have in U.S. Treasuries is slowly kind of deteriorating. And when the Fed admitted today, Powell admitted that we may not get back to 2% inflation in the old 1 to 2 range until late 25, 26. The Fed's essentially admitting that they probably cut rates, even though they're nowhere near, they're light years away from their real true financial, what we call inflation target. And that sets up for a colossal migration of assets.
If you're using your personal phone number to close business deals, you're not just mixing work and play, you're sabotaging your own chance of success. Not only can it look amateur, but you and your team are probably using 18 different apps to get this done. Let the sponsor of this video, Nextiva, cut this down to one app. Nextiva consolidates your business voice, texts, video meetings, and CRM inside of one app. You get seamless, personalized customer interactions across all channels. And you can even do this if you are currently running your business off your personal phone and your CRM is a spreadsheet. You don't need any tech experience. You just need to download their app and follow the easy setup. You can make this one change and your business will look as polished as a Fortune 500 company, and you'll be able to focus on closing and scaling. This is the year to level up your business and lower your costs. Use the link in the description below to get 50% off your plan. Yeah, what happens if, like you just said, Powell said, you know what, they might not be possible to get to their 2% inflation rate, their target. So what happens if they lower rates and it's too soon or it's too early and then inflation really gets out of control? Is that one of the big risks, or what would happen to the overall market if the Fed does cut rates too early?
Well, so I think that, about a year and last March of 2023, I made a call on Fox that we could crash, especially in the financials. And so, and I mentioned the banks in particular on that call on that Fox
Right.
um, Maria Bartiromo segment. I think the same thing is set up now where the financials are starting to, like, if you look at U.S. Bancorp, the spread between U.S. Bancorp and say J.P. Morgan is at the widest we've ever seen.
Wow.
And so under the surface, there's all this consumer stress, there's all this commercial real estate stress, there's pressure on the Fed to cut, but at the same time, they're going to have to cut it to run away deficit spending. We're running like 7-8%. We're running World War I, World War II type deficits right now
That's insane.
in what's supposedly full employment. And at the same time, the Trump and Biden debate opened the door toward protectionism where, if you're a global investor, both Trump and Biden told you on Thursday they're going down that protectionist path, and that means tariffs, and that's much, much, much more inflationary. The key to the whole financial asset regime that we've had the last 15, 20 years has been global supply chains, no tariffs, a beautiful globalist system where exports were not taxed with tariffs and things like that, and
Right.
supply chains worked a lot better, right? There was no people weren't bombing ships in the Suez Canal, right? So all of this has changed where you've got a multipolar world, as we talk about in our book. But Trump and Biden are basically coming out and telling you they're going down this protectionist path. That's much more inflationary. That's where it sets up for potential crash in the markets.
And yeah, you brought up the banks for failure. There's, I think, like a month ago, there was a list that came out from the FDIC for the 63 banks that are on their problem list now. And you seen last year they had four banks. There was problems with four banks in the U.S. last year. Do you see more banks going under, seeing more stress this year, next year? And what will that do to the overall market? Will it come from the commercial sector? Will it just come from the Fed? Like, what will the Fed do? Could they even react right now if you had Bank of America or some big banks start to go under? Would the Fed bail? Yeah, who would bail them out?
Well, yeah, that's what happened in 2023, right after my call on, we did crash inside the banks crash. The banks
Right.
all lost 40, 50, 60%. Then the Fed reversed policy, expanded the balance sheet. And that's why we had this revival in inflation in the first quarter of this year because of all that extra stimulus. And
Right.
so the Fed has this problem where if they promise higher for longer to kill inflation, what they do is they kind of like let that beast inside the market, that serpent inside the market, that's it's really impairing the banks, impairing the consumer. All of that forces that pain that consumer. Look at McDonald's, Darden restaurants, and Home Depot. These are the McDonald's and Darden restaurants. They employ 350,000 people, right?
Wow.
Their stocks are making new lows almost every day. The consumers in real pain. The banks, because of commercial real estate and auto loans, are real pain. So there's this credit crisis that's brewing. Look at triple C's and junk bonds. Triple C's, which are your junk of the junk, they're
Right.
the bonds are making new lows, yields are making new highs. All this is telling us that this beast inside the market is going to force the Fed to ease into a cycle where they really haven't killed inflation. And that gives you an incredible renaissance into hard assets.
Yeah, I'm reading just on your book there. There's investment opportunities, risk myths. What would be an investment opportunity other than silver and gold right now in this new economy that we're seeing, where there's tariffs, inflation not going away, higher interest rates? What is your best investment opportunity other than just silver and gold, in your opinion?
Well, the copper miners, we've been it's COPX.
Right.
Those names are going to be in a bull market for many years to come because you have the whole new data center rebuild of the U.S. power grid. In terms of value stocks, or the Dow Jones Industrial, just think of just asset allocation. The Dow stocks are the cheapest to the Nasdaq in a long time. The capitulation score we're getting there is extreme. So, the market could go down, but it could go down hard on the tech side. The spread between, say, Intel and Nvidia is at literally Katrina Category 5 capitulation level. So we're going to see, let me give an example. The SMH in recent weeks was 44% above the 200-day moving average.
That's the Taiwan Semiconductors.
That's the semiconductors index, of
Oh,
which NVIDIA is
semiconductors.
25% of that.
Okay.
And so Intel was 22, 23% below the 200-day. So in the second half of the year and into next year, we're going to have this big move out of growth stocks back to value, and companies like Intel. Remember, Intel, when all of these AI PCs come onto the market, and everybody, you and I, we're all going to have to buy, we're going to have to basically buy new PCs to participate in this AI revolution.
Right.
That's where the Intels of the world are going to really crush it. And so you're talking about the spread between NVIDIA and Intel. That's going to collapse in the second half of the year. Intel dramatically outperforms NVIDIA.
And where do you see silver going? We talk lots about gold, other precious metals, but specifically, where do you see silver going? I know a lot of people have been talking about there's for the on the mining side, there's going to be massive deficits for silver to get it out of the ground. Where do you see silver going, let's say now for the next 3 years? Is it just going to follow gold as gold goes up, or will you see way bigger gains in silver than in gold?
So the gold silver ratio recently broke 80. In a normal bull market, in commodities or just silver itself, and when the Fed typically starts cutting,
Right.
that gold silver ratio should trade below 50, definitely below 60, below 50, potentially below 30. And so that means silver is going to have probably a $45 to $55 handle on it between now and the next 3 years.
Wow. And what would you like? Do you guys go into mining companies as well for silver and gold, or is it just specifically gold or exploration? What do you guys look at?
Well, we look at the SIL as a diversified basket of silver miners. The SILJ is going to give you a little bit more
Right.
alpha on the upside. There's Pan American Silver, PAS. We really like the setup there. There's Hecla, but if you talk to Adrian Day is like an advisor to us, a famous gold and silver. You should probably have him on.
Oh yeah, I love Adrian. He's great.
Yeah, but Adrian's point is that there really aren't any pure silver miners anymore,
Right.
because the bear market over the last couple of years, we had different bear markets and bull markets, and they kind of like forced a lot of these companies. Like Barrick Gold right now is like literally becoming not more of a copper company, but Barrick right here is a screaming buy, because its copper components are extremely bullish, and they have the gold and silver components as well. But there you get all three. Barrick Gold is really Barrick copper and gold.
Wow, that's incredible. Well, it's Larry, it's such a huge pleasure having you come down to Wall Street Silver. Again, I'll put all your descriptions for your books in the links below for everyone to get to them. Every time you come on, it's such a huge pleasure. So thank you so much. And hopefully, as the market develops, we'd love to have you back on Wall Street Silver.
All right, and give my best to your friend Elon and the team.
Yeah, of course. Awesome.
Okay.
Talk to you
Okay,
soon.
all the best. Bye bye.
All right, bye-bye.